All right, guys, we're going to do an end of the market closing summary video where we're going to analyze what happened today, look at how the day closed. There was some, it was a big day for some stocks, and the markets moved around quite a bit. So I wanted to kind of do an end of the day video today. So let's get right into it. Give me a thumbs up if you find value, and here we go. So triple Qs. I like to start out here because tech is the heaviest weighted sector in the market. So we'll go ahead and look here first. So we've got a clear downtrend now in triple Qs. You can see here, if I look at the hourly, the 1 hour chart, we've just been walking down this trend line and making lower highs and lower lows. A key level to watch, I've got lots of little levels marked out right here, but a key level was really this level right here at 280.40 basically. And that is the level that we basically were trading in for quite a while. You can see held as resistance there, slightly popped above it there, but still held, chopped around it, but continued to hold, and then it broke out. So here's the breakout of that level. Well, we came all the way back down to do a back test. Here's your back test. There's a back test right there, and finally it broke. But then you can see right where they closed it today. It broke, and then they ramped it up and closed it right at that level again. So what I'm watching for, what I did is I'm going to look at this. I looked at this as a potential back test of that broken trend line, thinking lower prices were coming. So I took a short on triple Qs, but at the close today, however, I did it. It was a very small position. I didn't take nearly the same size. Basically, it's a 1/8 size position. With the elections coming up and how choppy and whippy the markets have been, I don't want to take a large position, even though the technicals tell me that this thing is going to go lower. So I've got some skin in the game, but at the same time, not a ton of conviction. However, so here's what you watch for, what I'm watching for. If we break to the upside, do a back test of this broken trend, or of this trend line right up here, 283 or so. If we can break up there and start to close above, and you get an hourly close above, then that would be your breakout. Otherwise, I think we continue to head lower. So I'm looking for lower prices, but I'm open to the fact that this might want to break out. One thing that got erased today, so previously it had it had positive divergence. Here's the Q, what it looked like before today. And you can see we were building some positive momentum in the triple Qs, and prices kept making slightly lower prices, and the momentum was bullish. Well, today that got burned through, and you now have continued negative momentum. So you've got momentum moving down, you've got prices moving down. It pretty much negated that bullish look in the momentum indicators. So what does that tell me? Well, that tells me that we are bearish. So looking for lower prices. Now, where do I think things go? I don't know where they're going to go up until the election, but if we continue to look bearish and the technical posture doesn't change, then I think we're heading down to the bottom of this range, down around 263, really it's about 264 by the time we actually get there. So looking for that. Where's 264? Well, 264 comes from this trend line that the Qs has been in really for 10 years. And you can see this is the top of the trend line. Here we've reaction there, lots of reactions right in there. And then as you zoom in, you'll see where we're trading at right now. Get to it right here. And it's this trend line right there. We're walking up to it. So as we come down, if we come down to 264, there it is right there. That would be that longer term potential support. However, I don't know, we've already tested it once right here, this cluster. If we come back down to it, I think we're going to break back down into the trading channel. And once you break back down, since we had this big breakout, if it ends up being a false breakout, I think we're heading down to the bottom of the channel, possibly lower, but definitely the bottom of the channel. And so, 220, 230, something like that. That's what I'm going to be watching for. You have to put the pieces together every day, so we don't know if that's how it's going to play out. But that's a possible scenario I can see happening. SPY, you can see here a clear breakdown. See how we broke above this trading? Here's this trading range that for the most, we were mostly trading in this for quite a while, and then you broke out. But you remember how I was talking about the move up was all being done in gaps higher? Well, we gapped up, moved a little, gapped up, moved a little. Well, that move was easily fadeable. When you have the market moving up only in the futures, or mostly in the futures, it's easy to fade, and that's what they did. So you can see broke out, but then now we've come back down and recaptured back within the trading range. So this was a false breakout as of right now. That's bearish. Anytime you have a false breakout, that's bearish. So I now think that we head down to the bottom of the trading range, which is right around 331, 331.50 or so. I think we're heading down there in short order. No bullish divergences on the daily and in the hourly. No bullish divergences on the hourly. We had one previously right here. That was your bullish divergence. It kept making marginally new lows while momentum kept moving, but that was all burned through today, and you've got now negative momentum. So that tells me we're heading lower. IWM, if you look here at the daily chart, this big sideways trading range right here, where we've been just kind of going sideways for years now, really since 2017, it's been going sideways, and this is the predominant trading range where we had two breakdowns that the market wanted to start a bear market, and the Fed came in and saved the market here. The Fed came in and saved the market here. So now where are we at? Well, we closed pretty much right on that support line at 159.63 on the daily chart. If you look at the hourly, it actually kind of came down, dipped below it, and then ran up and closed pretty much right at it. So they're going to keep us guessing. It either gaps up tomorrow or gaps down. We don't know which one it's going to be. XLV here. All I really see in XLV is, we've got this kind of sideways trading action. Resistance is this trend line right up here. Let me go ahead and get rid of this one. It's just been walking up that. And then we broke down. We started to break down here, did a back test, and we're continuing to kind of chop around sideways. I think that we're going to head down to this 97 level. I continue to see that in the cards, in the charts, but not there yet. So we'll just continue to watch this. But I do think it's going to continue to work its way lower. XLF here, they dipped below support right there at 24.67, but managed by the end of the day to ramp it up and close it just above. So that was a false breakdown. That's the thing with this market, and that's why I'm not interested in taking big, large positions in indices because you're getting a lot of false breakdowns and false breakouts. It's just whipping all over the place. So it breaks down, you think you're on a sell signal, and then it recovers and it, wipes you out. So I'm gonna trade the indices a little lighter for the time being, and the individual stock trades that I keep pointing out, the trade ideas, they're all working. Most of those in the last 2 to 3 weeks have been working and have been making good money. So I'm going to continue to look for those, and that's kind of how I'm going to do it. XLK, this is basically the same as triple Qs, but you can see trend line right here. It broke, looked like it was going to do a back test, but now it's recovered or recaptured back within this trading range right here. You could come up a little bit. It could be, you could say maybe it's right there, and maybe this wants to come up and tag 118.22. But the point is, it's back within the trading range. So if it runs up and hits that, that's an opportunity to short right up there. That's an objective area, at least to short. Nothing says it's going to work out, but that's an area that would make the most sense, and that's what I'd be looking for. The daily chart here on XLK, there's no bullish divergences on the hourly, the daily. There's no bullish divergences on the hourly. There was one right there. You could see we're clearly starting to work our way higher on the momentum as the prices continued to drift slightly lower, but today they burned through that divergence. So just like everything else, momentum is to the downside, trend is to the downside, and whether we bounce here and go up and tag some resistance levels, to me, it seems like a sell the rip market now. So we might not go that far. We might run up and just tag resistance. But I think that's where the sellers are looking to step in. So watch for that. So Apple here tags support right there at 112.80. You can see that's really the bottom of this trading range. So it broke out and then we came back and tagged the bottom of the trading range. And there is some bullish divergence here on the hourly chart. You can see just starting to build a little bit of momentum there on the RSI, and the PPO, yeah, it's about flat. So you could say it's a divergence because prices have continued to drift lower. So you've got prices drifting lower. They ran right into support, bullish divergences in place. So this thing could pop up to 118.54. That's what I would be looking for. That's the area I'd expect the sellers to step back in, though. Okay, Tesla, just a quick update. I did go ahead and cover this short position. Pretty small profit. I think it was about a 3% gain on that trade. But I covered it. There's some bullish divergence here on the hourly chart. You also on the daily, you do not have bullish divergence on the daily. It's just on the hourly. The daily, the momentum still looks like it's to the upside. So the thing is, I was watching it. We weren't getting the breakdowns. It just wasn't performing as the rest of the other trade ideas that I had. So what I'm looking for is, I'm looking for some sort of divergence to show up on the daily chart. I was up on it and it wasn't doing a lot, so I figured I would just go ahead and cover that one and wait for a better setup. The setup's okay. It has broken trend, but we've just drifted sideways. So if we can get some sort of maybe a move up and do a back test of this trend line right up here, then that would be an objective area. And if we do it soon, we'd probably get some better negative divergence here on the daily. So seeing if we get that pop in Tesla. Adobe here just starting to crack on the daily. You can see here, here's your trend line on the daily, walking up this trend line, and we just started to crack today. It was more impulsive when we were down here, but they managed to recover a big chunk of that. So we'll see. This could prove to be a whipsaw kind of false breakdown. I'm suspicious of this breakdown, but breakdown is a breakdown. It did break this trend line. So if that continues to work its way lower, then we probably are going to come down to somewhere around 424.22. This is not my favorite. I'm looking for better trades than this, but there it is right there. We could break and come down to 424, about 420, about 424. PayPal. All right, this one continues to work, down 2.87% today. And I got short this back when we broke trend right up here at 204.71. If you look at the daily, I don't know what this line here is doing, but on the daily, we had big negative divergence right there, basically like that, where momentum continued to move lower and prices continued to move slightly higher. So then you look for a break in trend line. Here's your break, and I think we're heading down to 189. Well, it's about 190 for the near term support. Might chop around a little bit there, but there's a big gap down lower, down at this 129.50 and 139.60. 139.60 is your gap entry. 129.50 is gap fill. That's the target for this trade. That's what makes sense as we come down into this zone and ultimately either fill the gap or at least get close. And the reason why I think we get there is big negative divergence on the weekly chart. You can see right there, the weekly momentum has been rolling over. Really, that divergence showed up right there. So this little area right here was a divergent high. And then again, this new right in here was also a divergent high. So momentum is falling off on the larger time frames for this stock. So that tells me that we're coming down over the next weeks to months down to fill this gap. Here's Pulte Homes, PHM. Continuing to work, you can see we broke trend. Here's your trend for 2020 right there. We broke trend right here, did a series of back tests, 1, 2, 3, kind of cluster areas. We back tested, and now we're just rolling over. Momentum is to the downside. You know, momentum continues to show that we're moving lower, and prices are confirming. So gap fill right here. I need to kind of adjust it. It's right about there at 39.72. Not too much more to go, but I think we're going to gap fill. That's the trade for this one. I don't know how much more I'll be holding this one, but so it's not obviously an area to short now because most of the trade is done, but we've got another 5 to 6% to go. And it's already down from the highs right there. It's down, you know, about 15%. So another 5 or 6% to go, and I'll be looking to cover this one. Okay, 2 more Intel, and we'll go to McDonald's, and then we'll wrap up. So Intel, here's the weekly chart on Intel. It's interesting because, you know, you've got, here's your 2009 bull market, you know, going all the way back to 2009 because this is a weekly chart. So this was the bull market that Intel, really the price channel that Intel was walking up, just kind of running from. So from lows to highs, Intel went up about 450%. In this bull market, but we're starting to see cracks. We're starting to see it break. So here's the thing. Did not have any negative divergence in the weekly for a while, although yes, there is some negative divergence right there on the weekly, but that you know, that can take years to play out. However, the trend line's interesting. Right here you can see we're starting to break. So last week we closed slightly below it, and this week we're seeing continued breakdown. So if this week just continues to sell off, people are exiting Intel, and that's probably the end of the bull market for this stock. And that's interesting to see things like that, like a tech company do that, the semiconductors. And if the semiconductors start doing that, we start seeing some of these other semiconductors break down, like NVIDIA, then that could be foreshadowing what's going to happen in large cap tech. Here's the daily, and you can see no real negative divergence in the daily either. So we didn't really have divergences forecasting, but you know, that gap down, it basically gapped down with the earnings call, and then it's continuing to sell off. So pretty weak action, pretty weak price action on that one. McDonald's. All right, so here's the uptrend that I have in McDonald's. I had an alert set for this one because I noticed it a couple weeks or months back. I don't even remember when I actually set the alert. But here's your uptrend line on the daily chart. And we were just walking up that. And I was looking for a breakdown of that uptrend line. And we got that today. Here's your daily breakdown. Closed, you know, a nice solid close below that trend line. So that's a nice impulsive breakdown sell signal. They did buy it up a little bit into the close. But, you know, maybe it wants to back test a little bit. But it has broken the trend. You had big negative divergence right there in the RSI. You had big negative divergence right there in the PPO. So dual indicators showing negative momentum. On the daily chart, we had a break in trend. It's everything that you need for a short. So looks good. Levels I've got, well, you know, I think we'll probably work our way down to this 203.15. And so that's the trade idea for that one. What I'm looking to do is I took the short. Yeah, it's about a 10% trade. What I'm looking to do, though, is if it wants to backtest, let's go to the hourly just to show that. See how it's kind of curled up towards the end? Well, they might want to do some backtesting. This market loves to backtest. I've noticed a lot of breakdowns. It's just the nature of a long, you know, people think we're still in a bull market, and they just buy the dip, and they've been doing it for 10 years. So you have a lot of investors and traders that's all they have ever known when it comes to their entire trading career. So they just continue to do it. And so that's why we get a lot of these back tests when we break. But, you know, being the savvy technical analysts people that you guys are, you would know that a broken trend, and when you do a back test, just gives you an opportunity to either enter a short at a good level or add to a short if you've already had a starter position. That's what I'm going to be doing. So I'm short McDonald. The way I played it, I shorted it. I caught this entire move down. It was a nice impulsive sell-off breakdown. I mean, 4 hourly candles of just all selling straight in a row there, and then 3 up. But that's your impulsive breakdown where everybody was just rushing to sell. And so the way I traded it, as I shorted the breakdown all the way down to the first level of support, which I had marked out in advance at 220.80. Basically, we hit that. I covered my short, and then I reestablished my short right here at 223.60, and I'll probably add to my short if we start to get some back testing action. That's all I got for the video, guys. Thank you, and I'll catch you guys on the next one.